Okay, in this video, I'm going to teach you how to trade commodities even if you're a complete beginner, and I'm going to give you a legit trading strategy that the big banks use. So yeah, let's get straight into the video. Okay, so the first step of trading commodities or any market that matter is you want to find the overall trend, right? The overall trend. And the way you do that is you can use the 4-hour chart, or we can use a daily chart. Now, all the big banks, all the hedge funds, any big institution that has billions of dollars are using the daily chart, right? They're using the daily chart for their analysis, and they're executing their orders on the 4-hour chart, right? So we, as traders, we want to follow what the big banks do. We don't want to go against them. We want to follow the trend, right? The trend is your friend. And if we just zoom out, the overall trend on crude oil and on the daily chart is bearish, right? It's bearish. So we just mark this out. We have price comes up like this, retraces, comes down. This whole move up here is really just a big retracement. Again, bearish, up like that. And then what's price likely to do? Retrace before continuing down. Now, I'm going to get on the 4-hour chart. I'm going to explain what this actually is here, but what we first need to do is we need to find the overall trend of the market. We want to follow the trend. And then once we've got the trend, we want to get on the 4-hour chart, right? Because it's so important. These big banks, these big hedge funds that have billions and billions of dollars, they can't execute. They can't even be day traders. They've got so much money to move into the markets. So the 4-hour chart is their execution time frame. And this is so important for us to understand and realize. Because to me, personally, in my experience, if you're trading commodities, you want to be a swing trader, right? Crude oil is probably the only one. Crude oil and gold is probably the only, maybe silver, that you can day trade reliably, but you don't want to be trading like copper or soybeans and day trading or scalping on the 5-minute, because for me that's very, very unreliable, right? You want to day trade a scalp, go look at forex, but you really want to swing trade commodities, because commodities, unlike FX, and commodities almost always are trending in at least one direction, right? They don't consolidate for months like forex does. So that's why I love commodities. Great for swing trading. But here we are on the 4-hour chart. Now, this right here is the most important thing in all of trading. And if there's one thing you take away from the video, let it be this, right? Liquidity is the only reason these markets move, right? So liquidity, for those who don't know, is essentially where people's stop loss orders are, right? And where I say people, I mean large banks, large institutions. Where would all the money be in the market? Because like I said, if you've got billions and billions of dollars to move into the market, you could only like get in and out of the market where there's billions of dollars. And the only places where there are billions of dollars is at key highs and key lows on the higher time frame. So on the 4-hour and the daily and the weekly, all that stuff, even the monthly, really. But at these major highs and major lows on the higher time frame, that's where there's lots of liquidity. That's where there's lots of stop loss orders. And the reason there is because lots of traders think this is good resistance. They think that price is going to come up, bounce all the way up here and reverse. Now what's actually happening is price is coming up, so smart money can sell the rally, right? Those who are in the know with billions of dollars who consistently are profitable, and then they can ride price down, right? Overall, we're bearish overall. Now some traders who don't do, they don't even zoom out, they don't even look at the daily chart, they have no idea that we're in a massive bear market, right? They have no idea, so they're just going to buy thinking that it's some good resistance. So we know there's lots of stop loss orders at these lows here, right? Lots of stop loss orders at these lows. And the markets will only move for these stop loss orders. Now, the reason it does that is because, and this is real trading, this is the reality of trading, is nobody knows why people are buying and selling. Anyone who says they know because, it's gone below the EMA, that's why people are buying, they're lying to you. They're lying to you. No one knows why Goldman Sachs is buying or selling crude oil, right? Or why JP Morgan wants to short crude oil. We have no idea why people are buying and selling, people are hedging. And for those who don't know what hedging is let's say you've got an oil company who sells oil. They might, hedge their position in the market. They might buy or sell a few futures contracts or even CFDs, right? Just to make sure that, let's say, if oil prices went down, because let's just suppose you're, BP, and I'm from the UK. BP is an oil company, but ExxonMobil too. If you're an oil company, you make all your money from selling oil, right? Now, if oil prices drop, you're going to lose a lot of money. So what these big oil companies do is they will just short crude oil, right? They will just short crude oil, and they'll have a position, maybe a few billion, right? A few $1 billion on crude oil, shorting it just in case, if let's say crude oil drops massively, their whole business of selling oil isn't going to be, they're not going to lose the whole business because they will make money on their short position, right? And if crude oil goes up, their business of selling oil will do really well, but their short position will lose out. So it hedges their profit, if that makes sense. Again, we have no idea why people are buying and selling, but what we do know is the only way these big elephants really can get into the market is at these key highs and key lows here, right? They can only get in at these key lows, key highs, when there's billions of dollars. They can't get in on the 5-minute chart, right? And what I just told you there, that liquidity works on forex, it works on stocks, futures, S&P 500, any market really, any market that has candlestick, and is driven by liquidity. It's the life of the markets. But anyway, bit of a tangent there, but if you're a beginner, you really need to understand liquidity, and don't worry if liquidity went over your head. It's going to take, probably a few videos to understand it, but I've got a full free trading course, which I'll talk about later on, right? But what we want to do on the 4-hour chart is we want to look for our entry. Now, for me, and after 4 years of trading, this is literally all my entry pattern is, right? So we've got the trend. We know we're bearish overall. We did that on the daily chart. What we want to do is we want to get the Fibonacci. We want to put at the most obvious high. You can use this high, but for me, this is the most obvious high here, right? Not this. This is like, it's not really, it's not really any move, right? This is the big bearish move. Sell the rally, ride price down. You can put your Fibonacci at the high, all the way to the low, like this, right? Like this. And then, for me, this is not, let me just get the settings over. This is the 0.705 level. This is why I'm trying. Now, this isn't some magic level. Someone was asking me about this. You can enter at the 0.75 level if that's what you really want to do. For me, personally, I just like this level. It's what I stuck with, and it works really well for me. Now, I will enter at the 0.705 level. I put my stop loss at the high and take profit. Always a free risk reward ratio. For me personally, right? This is just me. You can, have it here at the liquidity. But for me, it's always a free risk reward ratio, because what I found, and you should always backtest, but what I found from literally years and years and years of backtest is when price comes down and it takes out this low, it's almost always, I say 1 in 20 times, or at least 19 times out of 20, it will hit the free take profit, right? The free risk reward ratio. Very rarely will it take out this low here and then go all the way back again. Okay, and now what we're going to do, if you're in live price action, and this is what I love, this is another thing, I don't know about off topic here, but this is another thing I love about the 4-hour chart. You can easily fit this around work, right? Where I was working a 9-to-5 job, I tried to day trade, and it was absolute suicide. Day trading with a full-time job is a loser's game. I would strongly recommend just to use the 4-hour chart. If you want to be, if you're working your job, then you can leave your job and become a day trader. Here we go. And then what you're going to do, you set your limit order up here, so your entries here, take profits here, and your stop losses here, take profits here, and then you let price do its thing. So let me just put this on 3, so it's a bit obvious, right? You let price do its thing. You don't worry about the retracement. You let it do its thing. Right? Lots of people will be panicking here, closing their stop loss. You just gotta let price do its thing. Let it do its thing. Your eyes down, like that, right? Like that, right? Lots of people will panic here, like, oh my god, it's going against me. Let me close my position. You never ever do that. Just let price do its thing. Right? Let price do its thing. For me, honestly, as soon as I'm in a position, I just literally, I don't even look at the charts. I just close it. But yeah, that's all you need to be profitable trading. And I'm gonna give you lots of more examples, just because the only way you can learn trading is by repetition, constant examples. So yeah, let me go give you some more examples. Okay, so here we are on the daily chart for wheat, and we're going to do the exact same process that we did on crude oil, and that exact same process will work on any commodity or any financial market, including forex, stocks, futures, all that sort of stuff. So the first thing we do is we look at the daily chart and we look for the higher time frame trend. We want to zoom out and we want to find the overall trend of the market. Now, I hope it's really obvious since about May 2022. We've been very bearish on wheat, right? We're very bearish. Price is just going down. So we want to get onto the 4-hour chart, and we just want to look for short. Right? We want to look for short, and we want to look for liquidity, right? That's the only two things we need to look for the market. So then we got the 4-hour chart, and I'll mark out the liquidity for you. Okay, so here we are on the 4-hour chart, and as always, we mark out our liquidity. So this is our liquidity or support, and I think last time I called it resistance, but anyway, it doesn't matter. If there's one thing you want to understand as a trader or a beginner trader, that support and resistance does not work, and it's a complete waste of time. So what we do know though, and this is really important, is that we know, I think it's about 9 out of 10 funds underperform the S&P 500, right? So most hedge funds are unprofitable. Now the reason why, you might be asking why is that? It's because the hedge fund managers themselves, they make all their money off commissions, right? So when they get in and out of a trade, they make commission from their investors. So the investors do that. But anyway, that's not important, right? What is important is that liquidity works and that there is lots of money, lots of stop loss orders at these lows and at these highs. Of course, we're bearish. We only want to look for shorts, right? We only want to look for shorts. So we get onto a simple Fibonacci retracement. That's all we need. We don't need anything fancy. Now for me, I'm going to put it at the most obvious high. Now you can do this high or this high. Doesn't really matter. I mean, I'm just going to put it at this high. Or let's just go for the middle one. Doesn't really matter, right? If we're going to light price, I'm going to come all the way up here, hit this stop loss and then go down and not hit that. So let me just put it at this high here, right? Like this. And then what you're going to do, as always, is you're going to put your limit order up like this. Now, for those who don't know, a limit order is like, it's an order where, let's say price is where it is now. And if price hits this level instantly, you will sell it, right? Instantly, you'll get in a position. You don't have to babysit it. You don't have to be at the chart. You can be at work, and price will just get you, or the market will just get you into the position, right? And your stop loss will be here, and your take profit will be at this level down here, right? Like that, right? Automatically done for you. So that is why I always recommend for traders, even if you're a day trade on the 15-minute chart, you can do this exact same thing. Anyway, what we're gonna do, we're gonna do a play price action, and we're just gonna see what happens, right? We're gonna let price do its thing. So here we go, like that. So we're in the position at the wick. We just let price do its thing. We don't worry about the retracement. We don't worry about it. We just let price do its thing. We let price do its thing. Right? Let it drop. Let it drop. Like that. And these positions usually takes about a week at most. So here we go. Thursday to Wednesday, right? This is Wednesday. So less than a week, right? And you're risking $1,000, let's say, and you make 3K profit. Who's going to be angry at that? Do you know what I mean? Who's going to be angry at 3K made in a week? And this is a good thing about being a swing trader. You have multiple markets trade. You've got all of commodities, soybeans, gold, copper, anything you want to trade. And, if you really want to, because this model, what I've just given you right here, works just as easily on forex. Like, forget this is wheat, and forget this. This could be replaced with the S&P 500, NASDAQ, GBP, USD, anything. Bitcoin, really, Bitcoin too, Tesla. It works on all markets. But this model, the reason it works is because it's founded on logic, right? Higher time frame trend. I'm not guessing where price wants to go, and I've got liquidity. And yeah, that's all you need to trade commodities as a beginner, right? That's all you need to become a profitable trader. Now, if you don't understand liquidity, or this is like the first time you've heard liquidity, I would highly, strongly recommend that you check out my completely free trading course I made. Like 2.5 hours long. It teaches you everything you need to know about liquidity. And it teaches you how to fix your trading psychology once and for all, so you become a profitable trader. So go check that out. It should be in the pinned comment, and it should be on screen somewhere. I'm here. Other than that, make sure you subscribe, because this is a pretty good video. I'll give you lots of value here. And yeah, make sure you like the video too, and I'll see you guys next video. Peace.